Economist here. So I thought I'd give you guys a lumber update video. I know how much you guys love the lumber update video. And for those of you who don't know, I work at a retail lumber yard. I've been doing this my entire life. I live in the Pacific Northwest. I have my fingers on the pulse of the industry. I know loggers, I know mill operations, I know truck drivers, I know distribution hubs, I know other retailers out there. There's really no corner of this market that I cannot see. And I'm telling you right now, the inventory of lumber is very slim. There is an issue taking place within the lumber market right now that very few people can observe in real time. You have to be within the industry in order to observe this. Now, many people can look to the futures price and say, hey man, this is where lumber's at. And because the lumber futures price is somewhat low considering what we have experienced over the last few years, a lot of people look at that and say, oh man, there's no demand. There should be plenty of lumber out there considering the low price and low demand. But the reality of the situation is much different in the sense that there is little lumber to be had as far as the availability of all the different sizes of lumber. Now, many times people just think, well, lumber's lumber and that's it. But they don't think about what it is that is in demand coming from the market itself, going to those mills and what it is that they are going to produce. Now, locating 2x4s, 2x6, not so hard, right? There's plenty of stud, there's plenty of plate stock. That stuff is available. It's the other things that are not as much in demand, like 2x8s, 2x12s. These ones have less popularity as far as how much inventory is moved. Those particular sizes, those wider, longer lengths, those ones are not as much in demand from the market, so the mills just don't produce as much of that. I am facing a situation right now where there is a customer who is looking to buy a lumber package from us who has a particular size lumber that is not available out there right now. So it's not that it's not available in our location for immediate order. Now, will it show up? Absolutely. At some point in the future, it will be there. How far out and what the price will be, I don't know. And now that is not something that is going to provide the customers out there with the ability to do accurate bids, to know what timing, how to figure out like the logistics of the project. Not having this information, like how much and when can I get it, without those two critical pieces of information, it makes it very difficult to move forward on a project. And now this is the critical situation we are now facing. We have lumber mills who are in curtailment right now. Curtailment is when they produce less lumber to shrink the inventory to meet the demand. So the prices are falling. And as those prices are down, the mills say, okay, at this level, we cannot produce and profit. So we have to cut back on our inventory. Hopefully demand will meet the supply and the prices will find equilibrium. Now, this is the situation that we are facing, and that the demand coming from like home builders and, the rest of the market is very low. Mills don't want to produce inside of that environment. Now we have a situation in which inventory is low and the prices are low. See, like my customer can say, well, maybe I'll pay a higher price. It doesn't matter. Like, it doesn't matter. Like, I don't want to charge any more than I have to for it. It's a margin that I am trying to get. I want to achieve that margin. I don't have to charge higher for it. I just simply can't get the material. Like, think about that for just a bit. It's just like, it's not even the price that's the problem. Right? Now, prices will start to move up off of that demand and the lack of inventory that's available out there. People will say, hey, I'll pay a higher price for it. But until that higher price actually shows up and the mills recognize that, saying, okay, I will produce inside of this environment to meet that higher price demand. But until that actually occurs, we're going to find situations like this where the customers say, hey, I want to pull the trigger on it. It's like, fine, you can pay me for it, but I may not be able to get the material. And then once I do get the material, it may not be at this price, and I have no idea when it's going to show up. Like, how do you operate in that? You can't. This is the critical situation we are facing within the lumber industry right now. This can't be relieved in a matter of weeks. Like, this can't, like, when the mills switch and get out of curtailment and go into production, it takes a while for that production to ramp up, to be able to fill in the sluices, so to speak, to fill in the inventory. Like, a lot of times people think, well, you can just mill up more lumber. Just cut down the trees and mill it up. No big deal. But it's a lot harder, and it takes a lot more effort, time, logistics, like everything that goes into producing lumber is a process. You have to cut it from the hill, you have to haul it to the mill, it has to go through the process of milling. There's drying process, which go through kilns. There's only so much room, so much time that needs to be in the kilns. They can only produce so much lumber at a certain pace. And if the demand exceeds that pace of production, then you're going to find that the prices are going to be quite elevated if that demand is significant. Now, we aren't seeing that demand increase yet. That is coming. Like at some point, the builders will start to ramp up production. They will start taking out more permits. They will do more housing starts. You will find demand for new construction increasing. Are we there yet? Not even close. Will that come at some point in the future? You bet. And if this issue that has taken place within the mill curtailments that is shortening, squeezing the inventory levels, if this continues going into the future for any significant amount of time, once that switch does happen, because it will, it's inevitable at some point, the builders will switch and want to start building again. When that takes place, there's going to be a skyrocket in lumber prices. Right now, we're seeing depleted inventory and a suppressed price. It's on its way. And now, what I find interesting about this is that it could very well end up timing out in which that the better interest rate environment in which that people are believing is coming into the future could actually spark demand within the home builders. Now, that's a what if, a wait and see kind of thing. But if that happens to come in the next few months or even 6 months or a year down the road, I wonder how many times people are going to take into consideration that it's lumber tariffs that are creating the elevated price, not realizing how low of an inventory we are actually facing right now. I mean, I think about it right now. If this guy was to pull the trigger on this particular project, there's parts of his order I just can't get. Right? Maybe next week I can. That's crazy to think, right? How is it you're supposed to do business like that? You can't, you really just can't. All right. I'm going to build my own house. Will only take 10 years. All right. What's the crisis? I need a recap. It's a short inventory on lumber, not being able to meet a significant increase in demand. That would be the crisis. Ultimately, mill curtailment had started over a year ago, and I am getting even more notice of more mill curtailments going into the future. I mean, promised curtailment shutdowns at least until the end of 2025 and possibly into the first quarter of 2026. Once you start slowing this down, a lot of times we have to think of the whole picture of it. If the mills slow down, then that means they are not buying as much logs, right? That's the trees from the hills, right? So if they're not buying as much logs, the timber itself, the loggers who are cutting down those trees, they are now suffering the consequence from that. We have to think about it. Most logging operations are fairly small companies. They're like small businesses. Like they might be quite large as far as the amount of equipment, trucks, stuff that they have to operate with. It might be quite extensive and a lot of money that's involved with it. But for the most part, it's a small operation. It's a handful of guys who are up there cutting down the trees and hauling them off the hill, and there's several companies out there who will do that. Well, if you have a slowdown within the demand for timber, and you have the export of logs that is slowing down because of tariffs or whatever is happening out there, these companies, these logging operations, those who are set close to retirement or maybe at the cutting edge of being less profitable, they shut down. It's not like they just ramp up production again. Once they're out of the game, they're out of the game, right? And that's it, they're done. To be able to fire up another logging operation, another logging company, I mean, you think about it, an individual will have to then say, hey man, I'm going to start a business. I'm going to get the equipment, get the, yarders, the fella bunchers, the whatever it is that they're using in order to do their operation. I mean, that's a quite an extensive thing that you have to do as far as financing and getting the equipment and getting the contracts, and then doing that during a time in which that there's low demand. I mean, how do you keep up? You can't. Once those guys are out of the game, it's going to be very difficult to then find loggers to go out there and start cutting those trees, especially if you have like a big time, demands that starts to increase. Not saying that it can't happen, but you think about it, like the more that depletes, the harder it is to ramp it back up. All right, moving on. All right, Kirk says AI the only booming thing in the economy. I don't know if that's necessarily true. I mean, I guess so. It's probably the only booming thing. Okay. How long does the process of ramping up lumber production take in your estimation? There's no saying on how much time it takes. You have to think there's operations for logging, for mill operations, for transport from Canada all the way into the southern part of the United States. There is some areas that are profitable right now doing it in this condition. But not all mills are going to be profitable like this. Like, you have to think, the British Columbia area is high output, high cost producers. Now, although it's shifting down to the southern part of the United States, but there's still quite an extensive logging operation, mill operation taking place in the British Columbia area. So what it takes for them to ramp up production may be far different from what it takes down in the southern part of the United States. So there is no saying on how long it would take to fill in the inventory depleted gaps, so to speak. Now, during COVID, we had a significant slowdown in mill operations. There was a lot of curtailments and a huge inventory depletion taking place all throughout 2019. Now, a lot of times people will blame it on COVID, the slowdown in lumber production, but that's really secondary to what was taking place throughout 2019. I mean, I had reported on it every single week, a couple of times a week, another mill closure, mill curtailments. Like, the British Columbia area was devastated during that time, and then COVID hit and it got even worse, right? So understanding what is taking place right now is not the same for everybody, right? It's not the same in the southern part of the United States as it is up in the British Columbia area. Now, to think about what it is that's really taken place is the lack of demand within the lumber industry, right? It comes from the builders. Builders are the ones who are going to increase that demand. When that demand increases, then you will see the production start to ramp up. Now, down in the southern part of the United States, again, they have a lot of production that has taken place, and I don't think or believe that they're in the curtailment as much as, say, some of the places up in the British Columbia area or even here in the Pacific Northwest. Now, here in the Pacific Northwest, we did have quite a bit of mill curtailments, even from our local areas around here, but it's not like they don't produce. Right? They still produce lumber. They're always going to produce lumber. How much they can produce to meet the demand, that's the question. Like, how much should they produce? How much demand is going to be into the future? This is a very, open question for a lot of people to try and internalize, to say, hey man, how is it that I am going to operate going into the future if I don't know and I have this major concerns? Most likely, you're probably not going to cut down the tree if you have that concern, right? Like, as soon as you cut the tree down, it has to go somewhere or else it's going to rot. So that means it has to go into production. So this is really, once you think about it, you want to ramp up production. Now you got to get people up in there, cutting the trees down, getting the trees off the hill, getting it to the mill, and then the mill has to go into the operation of actually sawing that stuff up, getting it transported, getting it dried. There's a lot that goes into it. And then really, if the demand does pick up, you can only supply at a certain pace. Like, there's kilns that the lumber goes into. These are big giant rooms that the lumber goes into, green, then it gets heated up and they essentially suck all the water out. It dries all the water out of the lumber. That's a process that has a limited amount of space and it takes a certain amount of time. And you can't do anything about that except for build more kilns, right? So now, if you are in a situation in which that the lumber prices are suppressed, you're probably not going to be building kilns, right? I mean, there's going to be some some operation of new constructed lumber mills and kilns and stuff like that, but not enough to say, hey man, we're going to ramp up demand in this significant way, or ramp up production to meet demand in a significant way, only to have these kilns not needed in the future because it was an oversupply of them. Right? That's not the way they're going to do it. The kilns, the ones that they have available now, there might be some additional ones built into the future, but most likely they're just going to have to use the ones that are existing today to meet the demand coming into the future, which is then going to limit the amount of supply for a while, right? Eventually they'll meet it though. Does all that make sense? Did I say that right? Men suffer more in this hell realm. Sky Daddy, the only thing that is real is history. Okay. I don't know. You guys are going off on something. Okay. Uneducated on green agenda too. Huh. All right. Marriage sucks. Okay, well, let's find something else to talk about. All right, Wayne. Hey, someone forgot to click the like or unlike thumb. Get on it. It's free. Hidden cost, not in fiat. Someone has been hurt. Don't we have anything to talk about lumber? I mean, this is why we're here today. Let's talk about housing. Let's talk about lumber. You know, one of the things that I saw, and I wanted to get a little bit more research done before I really do a video on it, but that is I noticed that the institutional investors are selling off real estate, rental properties. At the same time, investors, like even the small-time investors, are picking up their pace of buying rental properties. So this is kind of like, you know, almost like a contradictory thing that's happening. Like the institutional investors are getting out of those rental properties. So people think, okay, housing market crash is on the way. But then really the investor community out there, which may not be necessarily part of the institutional investor, but the individual investor, is picking up the pace on those rental property purchases. Now, in my mind, I think to myself, is this a trend that's going to grow into the future? Because it's not significant yet. Like to say, hey man, they're an overwhelming part of the entire sales of real estate. Like that's not what I'm getting at all. What I'm getting at is that this direction in which that the transactions are taking place is happening within a community of people, the investor community. Like essentially the investor community is flipping homes, not necessarily like an individual who's buying a home, fixing it up, changing it, remodeling and flipping it. This is an institutional investor selling it to another investor who is essentially not taking it into any other position than a rental property. Right? It's like if the institutional investor was selling it to a home buyer who was going to live in it, that would be a different story. But if the person who is buying it is another investor who intends on renting it out into the future, this is where the transactions are taking place. I think to myself, man, that is not a good sign. Like that's more of the Cantillon effect taking place. That's a sign of the Cantillon effect more than anything out there. You think about it, the rents and leases that people charge on those properties is the sign of the abundance of money in the system. So as I see this start to happen, I'm thinking, man, is this a trend that's going to grow? Like it might be small now and it might be somewhat insignificant to somebody else out there. But to me, I'm thinking, man, if this is a trend that continues to go into the future, we may find where it's just nothing but landlords with rental properties flipping them to other landlords with rental properties. And that's where it ends up going instead of flipping a house to a homeowner or something like that. All right, investor buys a house, fixes it up and says, hey, I got this beautiful house for sale. And people are like, oh man, I totally want to live here. And they buy that house to live in. Instead, the transactions are going from landlord to landlord. Right? And who knows? Like, I mean, that can continue going into the future, but we got to wait and see. All right. Hider sleeping on the job. I doubt that. All right. Brody, thank you for being here, bud. Hit the like on the stream, please, everybody, because it will make YouTube share it more widely so we get more interesting questions in here. Yes, absolutely. It's one of the easiest ways to support the Uneducated Economist is simply by hitting that like button. All-nighter, it's great to see you up in here. Hey, Rob, getting ready to hit a Boba Park with my boy, right? Clear value tax is dialed in as always. Amazing insight. Yeah, I like clear value tax, but I did hear some stuff that falls very much into the narrative, and I don't want to, like, discredit any of his information. I find it very good stuff. I like the way it's delivered, quick and to the point, very short videos, and that's really awesome about that. But I did hear some stuff coming from clear value tax, which very much falls right inside with the mainstream media narrative. And I like right now, I can't necessarily pinpoint exactly, some stuff, but if I was to go back and review it, I could. But still, it's not, I'm not discrediting his information at all. It's just sometimes I was hoping and wanting to see more people dive into the monetary policy with the idea that the Federal Reserve was pushing the elevated inflation expectation to raise the neutral interest rate to get their ammunition back. All that story, like, that's the stuff that I wanted to hear more economists talk about. And it seemed that many of them out there were really just falling into the mainstream media narrative and delivering that same kind of idea. Now, not saying that it wasn't good, it wasn't like, valuable insight or whatever. I'm not trying to say that at all. But what I am saying is just like, dang, there was another view, another delivery of information that a lot of people just simply missed. And, I couldn't hear from anybody. Anyway. I bought a sawmill. My mini forest is gonna serve me well. I saw something about 1,700 stimmy checks for October. I'm doubting it. I'm discrediting his information. I'm joking, by the way. He is a great brand and channel, but his info is not great. Yeah, I mean, I don't know. I mean, like I said, I've watched a few of his videos, and I like I like the delivery. I like the energy that he puts into his videos, and I like some of the information. It was just like, but it's still like everybody. I was waiting, seeing, and hoping that somebody would pick up on the credible threat theory and deliver it in a way that I was at least trying to share with people. Something I found interesting is, like, I was looking at some of my past videos in the recessionless recession. I was like, man, I was so accurate on that description. People thought for sure there was going to be a recession at the end of 2023, end of 2024. Here it is, 2025, almost over, and there's still no recession. And they're thinking, are we in a recession now? Was there a recession? What's going on? And I'm thinking, did this not line up with the recessionless recession theory, where corporations, although would end up failing, layoffs would be massive, but they wouldn't get the bailout and you wouldn't see unemployment rise significantly? Boom. Like, it's happening. Total, like, it may not have, like, lined up exactly how I had described, but that was essentially the bulk of it, right? Like, that's the worst part of a recession, is corporations get bailed out and everybody loses their job. But if the people who lost their job essentially found a job at the service industry, it's not a good job, but it's a job, right? And if it's a job that you are working, then you're not unemployed. So unemployment wasn't going to rise significantly because there was so much open, available work at the service industry that nobody was working at. Like, nobody was working restaurants, nobody was making beds, nobody was flipping burgers or, serving beers or doing whatever, right? These people were essentially, like, gone from the workforce. Where did they go? Like, people were like, man, where did the workforce go? They just don't want to work. That's not the case, right? See, the corporations were bailed out back during the pandemic. People just didn't recognize it because the Federal Reserve had lowered interest rates to essentially zero, which then had the corporate bond market being the only place to get a return. And then the Federal Reserve put out a statement saying, hey, we are going to be buying corporate bonds with the corporate debt lending facility, which is a special purpose vehicle which can only exist during unusual and exigent circumstances, but with the rules of the Fed's 13.3, whatever, deployment of tools that are not typically available to them, they were able to set up this special purpose vehicle put out an announcement that they were going to be buying hundreds of billions of dollars worth of corporate debt. And then the moment that information got out there to the market started buying into the corporate debt. It loaded the corporations up with an insane amount of cheap debt or cheap money. Right? So now, once the corporations were funded, right, able to find most of the funding themselves through the market and the credible threat of what the Federal Reserve was out ready to do, these corporations were sitting on a ton of cash. What are you going to do? You're going to invest into your company. More buildings, more equipment, hiring people. And this is what those corporations ended up doing with a lot of that money, is they started this hiring spree. All of a sudden, everybody could just go get a job at some zombie corporations with no college degree or experience or anything else like that. And they left the service industry, went up into these zombie corporations that eventually are failing, like we're experiencing now. Layoffs are massive, but when they get laid off, they go to work at the service industry, so the unemployment doesn't rise significantly. And because they were a zombie corporation and because the corporations had already been bailed out, the zombie corporations, which aren't a feasible corporation to exist anyway, they're going to fail, and they let them. It's like clearing out the bad undergrowth, the bad debt, right? And so it totally took place. I'm sitting there going, holy moly, it actually occurred the way I thought it was going to. Now, I couldn't describe it exactly, like this company is going to fail and that market is going to, whatever. Like, I couldn't describe it like that, but, the bottom line, right? Corporations already got bailed out. The zombie corporations will fail. Those who get laid off from those corporations will go to work at the service industry, and the unemployment won't rise significantly. Boom, here we are. I feel I'm the only one who described that. Now, I want to go search to see how early I was calling out the recessionless recession. And as I was doing the research for it, I found where, like, the AI, Google and Grok and ChatGPT, all of them kept saying Jim Cramer was the first one to coin the term recessionless recession in 2024. And I'm thinking, hell no. I got YouTube videos back in 2023 calling the recessionless recession. So although many economists picked up on it after the fact, they could not see it coming. They didn't see it coming. Not like I did. And I'm not trying to be bragging it up like I'm some sort of super genius, but it was ultimately stated in the Federal Reserve's own words if you had read the speeches. Like, let me see if I can find it here. What time is it? Oh, I don't know if I have my computer. Oh, yeah, I guess there's a little bit of power here. Let me see if I can find it for you guys real quick here. And then I got to go back to work. But, let me see here. Where was it? Is this it? No, that's not it. Darn it. All right. But there is speeches that was given back in the day. Clarita. There it is. Is that the one? Yeah. All right. So this is it. This is right here. This is where the Federal Reserve essentially bailed out the corporations without ever lifting a finger. All they had to do was just put out the credible threat, use their words. This is proof of it right here. Now, this is a speech given by Richard Clarita, May 21st of 2020. Think about it. This is like early in the days of the pandemic. I mean, it was just barely ramping up here. And this is what it has to say. Where are my glasses? All right. Since March 17th, the Federal Reserve Board has announced the establishment of no fewer than 9 new facilities to support the flow of credit to households and businesses. The programs are authorized under emergency lending powers granted to the Federal Reserve under Section 13(3) of the Federal Reserve Act and are available only in, quote, unusual and exigent circumstances. And with the consent of the Secretary of Treasury, I think you will agree that today we face circumstances that are both exigent and unusual. These facilities are supported with money invested by the Department of Treasury, drawing on appropriations of more than $450 billion by the Congress in the CARES Act, Coronavirus Aid, Relief, and Economic Security Act. For the specific purpose of investing in Fed programs to sustain the flow of credit to households, firms, and communities during the coronavirus pandemic. So here it is. We got the pandemic, unusual and exigent circumstances, providing the Federal Reserve with a tool that they never would ever be able to use if it wasn't for COVID, the unusual and exigent circumstance. That unusual and exigent circumstance tool is the deployment of these lending facilities, the special purpose vehicles. Now, this is crazy. Listen to this. He admits it straight up. With these facilities, we are providing a bridge by stepping in and supporting lending throughout the economy until the recovery takes hold. They're going to say, hey, we're going to deploy all this money. We're going to lend all this money out there to the people, right? And part of that is to these corporations. They're going to, like, I was one of the people out there screaming, they're picking the winners and losers, right? And everybody thought for sure that the Federal Reserve was going to be loading up on corporate debt. This is what it has to say. These programs are designed to offer a backstop source of funding to the private sector. And here it comes, just the announcement that these backstop facilities would soon be launched appears to have bolstered confidence in the capital market, allowing many of these companies to finance themselves privately even before the facilities were up and running. Just the credible threat alone that they were about ready to do this gave all the funding these corporations needed. They loaded up on cheap debt. They sold corporate debt. They sold junk bonds out there to the market because the market believed that the Federal Reserve, using this unusual and exigent circumstance, creating this special purpose vehicle of corporate debt lending facility, they thought for sure that they would be able to sell that corporate debt to the Federal Reserve. And just the announcements was enough to give confidence, bolstered confidence within the capital markets, allowing many of these companies to finance themselves privately even before the facilities were up and running. Boom. Right? This is how the corporations got bailed out. It was a pre-bailout. See, we're sitting here wondering when is it the recession's going to kick in? And I'm thinking, no, all the viable corporations already got all the funding they need. They were gorging on cheap debt just a couple of years ago. And so now here you got layoffs taking place within the zombie corporations. People are like, look at, witness, see how bad the economy is? And I'm thinking, yeah, all those people are going to go to work flipping burgers and serving beers. And you're not going to see the unemployment rise significantly. Here we are sitting in that exact state. Now, will it continue going into the future is anybody's guess, but why we are here today without seeing a major recession was exactly the way that I described. And I feel like I'm the only one who did that, right? In this way. All right. Do people believe we are getting a $2,000 stimulus check for tariffs? I don't know. Some people, I guess, believe that. I don't. All right, can rumors of 2,000 tariff stimmy check for everyone be considered a credible threat? I would think so if people start acting upon that. Yeah, I mean, if you put out the credible threat that they are going to get a $2,000 stimulus check and they put it into the people's head that it is a guarantee that it's going to come, they will spend the money before it gets there. Any uptick in demand? I haven't seen any real uptick in lumber demand as of yet. Like, not significant. I've seen some activity happen that would kind of like say, hey man, we might see some like changes to it, but I don't see like ramping up of demand. However, on the other side of that, I don't see it depleting anymore. Like there was a time when the demand just kept getting less and less and less, and I'm like, man, this is getting worse from the time before, from the week before, from the month before. But I don't feel that deterioration now. If anything, I do feel it's picked up a little bit, just not enough, you know, and not even enough to say, hey man, this is awesome. Nothing like that, nothing to write home about, but it is to me showing a sign that it's not depleting anymore. Like it's not falling any further, the demand anyway. You know, it's still low, but it's not, you know, how much lower can it go? I just don't know. I don't think it could go much lower. It could, I guess, you know. Thank you for answering. Yeah, you bet, man. Stimulus check from what? From tariffs that are probably going to end up having to get paid back anyway. So think about it. If you get paid a tariff, stimmy check, and then they deem the tariffs illegal. Think about it. How do they pay that back without taxing? Right? They're just going to have to tax the people. So it's going to be more of a tax burden, right? And that sucks because now you get less government and you don't get the money because you got to pay it back in taxes. Could you review lumber company stocks? I don't think so. That's more, like, I don't know what it is that you would look for information other than that of being like an investment. And I don't do investment kind of information here. We're looking for economic forces. If you're looking for the information to do investment, then just take whatever it is that I am providing as part of your own research. Because if you're following my channel to do investment, I may not deliver you the information that you need in order to get in and out at the appropriate times, because that's not what I am focusing in on. Now, there was a minute there that I did give an idea to the people on what it was that I was doing with the information to try and make a profit. I used a 3 times leveraged ETF, which is about as dangerous of a move that you could ever possibly use in order to profit in a way that I felt that I could do it. But I wouldn't want anybody else to follow that, because that's not what I'm doing here. Like, I am trying to share how it is that these underlying economic forces paint a picture that you can now internalize so that you can make the appropriate decisions for yourself. And if it's all about like investing, I don't know if I'm going to be the channel to follow, right? Like that, I'm not, like, that's not the direction that I'm headed with everything that I'm learning here. Can you use it for investing? Absolutely. Like, understanding the economic forces is critical for that. But, you know, the general conversation here isn't one to, hey, put your money here for this amount of time so that you can pull this amount of yield off of it. That's not the direction I'm going to go. Could $300 worth of food stamps to every American UBI style help the economy? People have to eat, and it's not like $300 and all of a sudden people will eat more food. Jesus, no, it'll actually do the opposite. I mean, at first it'll be great because the people who have access to that money will get to spend it, and then it'll be like, hey man, this is awesome. The only problem is that it gives them an extra $300 to spend, which will then most likely go into raising their standard of living, move into a luxurious item, going into toys. Most likely it will not go into paying off debt. It won't go into, you know, investment into a return. It won't go into the appropriate place. And now I am saying that not to belittle anybody out there, but if they were going to be making the right decisions with the money to begin with, they wouldn't be there. Right? I mean, don't get me wrong. There might be people who have fallen into a particular circumstance that says, no, I would make the appropriate decisions with the money. I just happen to be in a bad spot right now. That happens to people. But for the most part, the reason why people are poor and can't afford things in their life is because they literally condition themselves to do that because of their understanding of money and how it is that they deal with it. If you give them $300, they most likely will not have learned anything on how to appropriately deal with it, other than thinking, oh man, thank you for the relief. I have something to eat now, and I'm gonna go off and have some fun. Right? That'll be the mindset. And it's unfortunate, but that's just the way it is. So what will end up as a result is the extra new money, whether it's through food stamps or whatever, will eventually find its way up to the top, and you will find ever increasing amounts of separation between the rich and the poor, because that is new money coming into the system, even if it is just directed towards food. All right. I was taught if I want to have it, to work for it. All right. What time is it? All righty, guys. I'm going to call it quits here in just a minute. If everyone went on a diet, the food prices would fall. Not giving them money for food. I guess. Okay. We pay interest on free money, which means it's not actually free. Alright, poor can't make a big enough move to catch up. Gunner, thank you so much for the $4.99, man. I really appreciate the support, bud. Alright. Thank you, Simon. You're the best. Well, I appreciate you, Brody, man. Thank you for being here and all the hard work you and all-nighter put into the channel. And doing the moderations and making sure the spam stays light and the hateful messages get deleted. All right, we need a UE crypto token. That's awesome. Actually, something I thought would be fun to do would be a silver coin, like a UE silver coin or something like that. And that would be a neat thing to sell. Like, as far as things to sell, like I would totally find that to be an awesome souvenir or just an item for somebody to purchase just to have, whatever. I think that would be neat. So I should really look into making like a silver UE coin that everybody can buy. All right, I appreciate the live stream at my desk, my brother. Yeah, you bet. Brad, I appreciate you guys tuning in. I was taught if everybody wants it, buy it the stock. Yeah. That's actually true. Like if you could see the trend ahead of time, you're thinking, man, that's going to be a really popular item to buy into the company that's doing it. Yeah, that's like, absolutely. Just let me know before you pull the rug on everyone so I can get out. Congratulations, moderators. They keep me in line. Right. Yeah, I do. I have I have two of the best moderators that you can have on YouTube, in my opinion anyway. I mean, I don't know, maybe there's some other guys who do a pretty good job, but these guys are dedicated to it. They are very cool, and I can't tell you how much I appreciate it for the channel itself and just keeping the algorithm going. I literally just started getting interested in wood 2 days ago. No joke, unbelievable. Greg Pepe, is that what it is? Yeah. Great industry to follow, man, especially when it comes to understanding the bigger macroeconomic picture. The demand for lumber is very telling about what is taking place within not only the broader economy, but within the manufacturing, just the overall health of the economy. As people are feeling better, doing more work, profiting more, you will start finding that the new construction market starts to ramp up. People want to build when they're doing well, like when the economy is doing well. So the demand for lumber is an obvious sign of that. All right, you guys are awesome. Thank you so much for being here. And thank you for all the comments. Thank you so much for the super chat. Thank you for hitting that like button. By hitting that like button, you get the YouTube algorithm to send this video around for more people to join in. If you know a builder, if you know somebody who's in the real estate game, if you know somebody who's looking to build a house here in the future, this video might help them out to understand what is taking place within the lumber industry and what could be happening here in the near future. Understanding that we are in low inventory levels, we have low demand, we have low prices. This is a setup. Essentially, I don't know if it's set up by the corporate, by the powers that be. Anyway, this is set up for a definite rise in lumber once the demand picks up. I just don't feel that there is a lot of inventory out there, and with the incredibly low demand, they're not going to fill that inventory in any kind of significant way to meet any kind of pop in demand. So if that demand is all of a sudden starts to pick up, you're going to find that the inventory depletion within lumber is going to cause the prices to rise. All right, just wanted to keep that up. And Meat Bingo is grim, dang. You guys are awesome. Thank you so much for being here. Uneducated Economist, you let me know.